The US dollar is lower versus the three major currency pairs to kickstart the new trading day and the new trading week. Hopes of a China-US deal are in the works as the markets prepare for the Xi-Trump meeting on Thursday. I'll go through the technicals that are driving these three currency pairs in this video, so let's get started. Looking at the hourly chart of the euro versus US dollar, we closed the week in between the 100-hour moving average and the 200-hour moving average. That's the blue line right here and the green line right here. In trading here today, we've seen up and down price action, but starting the day with the price moving back to the upside. And we're also back above that 200-hour moving average, green line here. That level comes in at 1.1635, and you can see we're just above that level. On the top side, we do have this key 100-day moving average at 1.16607 as the next target to get to and through. If the price can get above that level, it opens the door for a rotation toward the 38.2% retracement of the move down from this high going back to September high to the low price that we saw in October. That level comes in at 1.1685. Recall from a few weeks ago, the price that did move above that level on its way to the 50% retracement level of the same move to the downside, and that will be the next key target after getting above that 38.2% retracement. Also within where the 100-day moving average is within is the high that it represents the high of this swing area going back in time to these different lows right here, which form this floor, and then the price fell below the floor, use that level as resistance through here, and then use it again as a support here before resistance right here. So there's a lot of instances of either support or resistance against this area between 1.16449 and 1.16607. As you can see, we've just moved up toward the high or the low of that swing area, and so there's room to roam on the top side. We do need to get above the 100-day moving average. If we can't get above that level and we start to move back below the 100-hour moving average, that would not look well, especially since the price has been above that level all day long. Let's take a look at the dollar versus yen next, and we'll focus on the hourly chart for this currency pair. And the price on Friday moved volatile to the upside and then back to the downside, but the downsides came and found support against this swing area here, and here. You can see the number of different times the market either found either support or resistance against that level, and the big move to the downside here did find support against that level once again, pushed back up to the upside almost immediately, and saw the price close near the highs for the day. Of course, this high right here was the next key target. That was a high that we saw in October, and that level coming at 153.269. And what did the high price come in today? 153.25. So just short of that target on the top side. And since then, we've seen a rotation to the downside. The dollar is lower versus the dollar yen now. On the downside, we do have the 100-hour moving average at 152.383 as the next key target. In trading last week, we did trade below that level right through here. We had one failed break right here, keeping the bias more to the downside. But when the price couldn't get below the 38.2% retracement right through here, we started to see rotation back to the upside, and the move above that level started to test the 200-hour moving average through here before again moving to the upside. So that 100-hour moving average at 152.383 has some significance. From a technical perspective, if we move below that level, then we'll look back toward the swing area at 152.11 to get to and through. On the top side, if we do break above the 153.269 and go to the daily chart, we're going to have the 61.8% retracement of the range since the 2024 high and the 2024 low. This is a trading range over the last over a year. That level comes in at 153.397. Get above that level, then Then it opens the door for this level at 154.73. So be aware that there's room on that upside, but there is also the 61.8% retracement to deal with. Finally, let's take a look at the sterling versus US dollar. And what sticks out here is that on Friday, the high price came up to the 100-hour moving average, found willing sellers. And in trading here today, as we start the North American session, we are breaking above that 100-hour moving average of 1.33393. That level also happens to correspond roughly with the high price of this swing area through here, where we had a number of different swing lows and swing highs. More importantly, how we had this floor coming back to this area right through here, a number of different lows right through here, forming this floor before breaking below the floor and trading above and below that level over the last few weeks of trading. So getting above that 100-hour moving average, getting above that whole floor is more bullish for this pair. On the top side, we do have the 200-hour moving average at 1.33757 as the next key target to get to and through. Ultimately, we need to get above both the 100 and 200-hour moving average to increase the bullish bias for the pound versus US dollar. If we do fail up on this break of the 100-hour moving average and start to move back below the low of the swing area at 1.3323, that would not be good for the buyers. That would probably lead to more selling momentum with this low at 133.049 and the low price for the week of last week as the next key targets on the downside before we head toward the 132.47 to 132.59 area. So there you have it, a look at three of the major currency pairs to kickstart your trading day and the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.